How Ray Dalio's investing principles can help you master your finances. Imagine building a financial empire, starting with nothing but a set of principles, some curiosity, and an unwavering belief that everything is connected. That's exactly what Ray Dalio, the founder of Bridgewater Associates, did. Today, his firm is one of the largest hedge funds in the world, managing over $150 billion in assets. But Dalio's success didn't come by chance. It's the result of years of refining his investment principles and applying them in the real world. So how did Dalio get there? And more importantly, what can you learn from his investing principles to master your own finances? In this video, we'll break down the core ideas that propelled Dalio to success and how you can use them to make smarter financial decisions. Stick around to find out how the principles that helped Ray Dalio build a fortune can help you gain control over your financial future. Embrace radical transparency. One of Ray Dalio's most well-known principles is radical transparency. At Bridgewater Associates, this philosophy guides the way employees communicate, make decisions, and hold each other accountable. The idea behind radical transparency is that the truth, no matter how uncomfortable, is essential to making informed decisions. It's about creating an environment where everyone, regardless of position or rank, is encouraged to speak their minds and share their ideas openly. This level of openness allows for greater problem-solving and quicker, more accurate decision-making. When it comes to managing your finances, radical transparency can be a game-changer. If you're transparent with yourself about your spending habits, savings, and investments, you can make more accurate financial decisions. The problem is that many people shy away from financial transparency. They'd avoid looking at their bank statements, ignore their credit card balances, or don't fully understand where their money is going. Understand and learn from your mistakes. Ray Dalio is a firm believer in learning from your mistakes, and he takes this principle seriously. In fact, one of his core investing principles is pain plus reflection equals progress. Dalio argues that every mistake is an opportunity to learn, provided you reflect on it and take steps to avoid repeating it. For Dalio, mistakes are not something to be ashamed of. They're a natural part of the learning process, especially when it comes to investing. He encourages people to think of mistakes as stepping stones toward improvement, rather than as roadblocks. When it comes to your personal finances, embracing mistakes as learning opportunities is essential. Everyone makes financial missteps, whether it's overspending, failing to invest early, or taking on too much debt. But Dalio's approach teaches us that these missteps aren't the end of the road. Instead, they're chances to adjust, adapt, and grow. Diversification is key. Dalio's approach to investing revolves heavily around diversification. He famously created the Pure Alpha strategy at Bridgewater, which involves diversifying investments across different asset classes to reduce risk and increase the likelihood of earning consistent returns. Dalio argues that the key to building wealth while minimizing risk is to spread your investments across a wide variety of markets, sectors, and even countries. By doing so, you protect yourself against the volatility of any one asset class or market. When you apply this principle to your own finances, diversification can be your shield against market volatility. Imagine putting all of your savings into a single stock or asset class. If that investment crashes, your entire portfolio could go with it. However, by diversifying your assets, investing in stocks, bonds, real estate, and perhaps even international markets, you reduce the risk of a catastrophic financial loss. The importance of systematic decision-making. Ray Dalio is a huge advocate for systematic decision-making. Rather than relying on emotions or gut instincts, Dalio uses algorithms, historical data, and a structured approach to making decisions at Bridgewater Associates. This method allows him to remove biases and increase the likelihood of making objective, rational decisions. Dalio believes that, especially in investing, it's easy to fall victim to emotional reactions, whether it's panic selling during a market dip or euphoria during a market rally. By following a systematic process, Dalio ensures that decisions are based on logic and reason, rather than fleeting emotions. When it comes to managing your own finances, implementing a systematic approach is key. Many people make financial decisions based on short-term emotions, perhaps impulsively buying something they don't need or selling off investments during a market downturn out of fear. By creating a set of financial rules and sticking to them, you can avoid emotional traps that lead to poor decision-making. Embrace the power of radical open-mindedness. One of Ray Dalio's most powerful principles is the concept of radical open-mindedness. This means being willing to listen to others, especially those who have opposing views, and using those differing perspectives to improve your own thinking. Dalio encourages people to approach life and investing with a mindset that is constantly evolving, always open to new information and alternative viewpoints. This mindset helps Dalio make smarter investment decisions, avoid confirmation bias, and improve his decision-making over time. For your own financial journey, adopting radical open-mindedness can be a powerful tool. It's easy to get stuck in your own financial mindset, especially if you've been successful with a certain strategy or investment. But Dalio teaches us that the world is constantly changing, and being open to new ideas and strategies can help you adapt and thrive in an ever-evolving financial landscape. Whether it's learning about new investment opportunities, hearing from a financial expert, or simply considering a different point of view, keeping your mind open allows you to make more informed decisions. Understand the importance of timing. Dalio stresses that timing is one of the most important factors in successful investing. He believes that understanding the macroeconomic environment, the cycles of boom and bust, inflation and deflation, and the movement of global markets is key to making informed investment decisions. Dalio is known for his ability to predict economic trends based on historical patterns, and he uses this insight to time his investments for maximum profitability. For personal finance, understanding the importance of timing can be just as crucial. It's not enough to simply invest in the right assets. You also need to consider when to make those investments. Timing affects everything from when to enter or exit the stock market, to when to buy real estate or make major financial moves. However, Dalio also warns against trying to time the market perfectly, something even seasoned investors often struggle with. Build a strong team around you. Ray Dalio has built a powerhouse of investors and decision-makers around him at Bridgewater Associates. He understands that, no matter how skilled you are, having a team of smart, capable individuals is crucial to success. Dalio's team is made up of people with diverse perspectives, experiences, and expertise, and they all work together to make the best possible decisions. He believes that when you surround yourself with talented people, you can leverage their strengths to achieve greater success. When it comes to your personal finances, this principle can be applied by surrounding yourself with experts, whether it's a financial advisor, accountant, or lawyer, who can help you make smarter decisions. Think in probabilities. Ray Dalio is famous for thinking in probabilities. Rather than focusing on certainties or guarantees, he looks at investments and opportunities in terms of likelihoods and risks. Dalio uses historical data, economic models, and statistical analysis to assess the probability of success or failure in any given investment. This approach allows him to make more rational, calculated decisions, rather than relying on gut instinct or wishful thinking. When it comes to personal finance, adopting this mindset can help you make better, more informed decisions. Instead of assuming that any investment or decision is a surefire success, start thinking about the probabilities. Ray Dalio's investing principles aren't just for Wall Street titans. They're lessons anyone can apply to their own finances. By embracing radical transparency, learning from mistakes, diversifying, and thinking systematically, you can set yourself up for financial success. Dalio's principles are about making informed decisions, reducing risk, and being open to learning and growing over time. By applying these principles to your own financial journey, you'll be better equipped to navigate the complexities of wealth building and achieve your long-term financial goals. If you found these insights helpful, make sure to like, comment, and subscribe for more tips on mastering your money. And remember, as Dalio teaches, the journey toward financial success is ongoing, so keep learning, keep growing, and keep investing in your future.